Money. Money.
Property tax, frequently asked questions. There are a few things in life that are certain as taxes, especially when it comes to buying, selling, and owning real estate. Today, I want to break down when taxes are due, when they may be paid, and how they're calculated. What tax relief programs are available that you might have access to. Property taxes have a timeline that are different than most other taxes or bills that we pay. Taxes are due twice a year, both towards the middle of each cycle. So first half taxes are due at the end of April and cover for January through June. And second half taxes are due at the end of October and cover July through December. Now, King County mails out their statement in the middle of February, actually on February 14th, so happy Valentine's Day. That's when you get your property tax statement or when it's been mailed. Now, property tax proration. Because taxes are due towards the middle of the tax period that they cover, a real estate seller may receive a refund or a probate taxes depending on the closing date. For an example, a sale that closes in March will have both parties paying prorated taxes. The seller pays from January 1st to the date of closing, and the buyer pays from closing date to June 30th. A closing that happens in May would give the seller a refund for prorated taxes from the closing date to the end of June, since the seller would not have, since they paid the taxes in April for the entire first half tax year. Can property taxes be paid in advance? Yes. The second half tax year can be paid in advance, but not the first half. Washington state law doesn't allow the county treasurer to collect property taxes until February 15th of the year that they are due. So the first half is typically payable anytime between February 15th and April 30th. And the second half is typically payable anytime between February 15th and October 31st. It is not necessary to have a tax statement to mail in with your payment. So if you decide to mail in the payment without a tax statement, you must write your tax account number on the check. Mailed payments must be postmarked on or before the due date. Otherwise, they're going to be considered late. Now, how are property taxes calculated? The property tax for a given parcel are based on the fairly simple calculation. Multiply the total assessed or taxed value of the parcel by the levy rate for the parcel's neighborhood. In addition, there can be fees added by the county to cover specific services. Now, assessed value and levy rate. The two factors are used to calculate in taxes are assessed value of the property and the levy rate for that area. Now, levy rates are represented in dollars per thousand. So to calculate the tax amount, multiply the assessed value by the levy rate and divide by 1,000. So last year's assessed value times this year's levy rate equal tax amount due. Now, what determines the levy rate? The levy rates are determined by a number of factors, including the results of the voters' approved levy, so pay attention to those. Property taxes usually aren't certified until the middle of February, even though the assessments were mailed out the previous year, which often causes some confusion. In other words, assessment value stated a statement that you get in the second half of this year has no effect on taxes that you pay this year. The valuation will be used in the calculation for the next year's taxes. So you won't know your actual tax that will need to be paid for the year until the county certifies that year's taxes in the middle of February, even though that year's assessed values have been available for months. Now, assessed value versus taxable value. The assessed value typically is the same as a taxable value, except in cases where the taxpayer has applied for and received an exemption. For example, senior and disabled property owners may qualify for tax reductions. In some cases, home improvements may qualify for a 3-year exemption for taxes on the value of the improvement. Now, what tax relief programs are available? We have an open space classification of agriculture land, timber lake, and natural preserves. Also designated forest land classified for timber lake parcels 20 acres or more. Historical restoration exemptions for historical significant property undergoing restoration. Improvement exception. This is single-family dwellings with temporary exemption on valuation of additions to single-family dwellings. Destroyed property claim adjustment to the valuation of destroyed property. Also, there's property tax exemptions for senior citizens and disabled persons. Now, it's important a lot of times I've noticed that senior citizens don't know that they have this. You can actually go back 3 years if for some reason you missed it. Further back than that, you've missed out on this. So you want to make sure you check into that and see if your income qualifies. full tax deferrals for senior citizens and disabled persons. There's also exemptions for qualified property owners by nonprofit organizations, and last, property tax deferral for those with limited income. So make sure you look into those and you're not missing any of these tax relief programs. Now, property tax resources for King, Pierce, and Snohomish County, you can call the assessor treasurer hotline. You can go online for tax parcel account information or number, see or print a tax statement, and you can make online payments, which they've made that really easy to collect payments for your property taxes. So just a little bit of a background and breakdown of property taxes. Coming up next in the Money Hour, here to discuss today's real estate market and what's up in the South End market, my South End expert here, Eric Tinglam with Skyline Properties, Trident Realty Group Northwest, right here at 11:50 a.m. KKNW after the short break.